Most traders don't even realize they are living in hell. They wake up, open their charts, and chase. New indicators, new strategies, new YouTube gurus. Every week, something's different. They drown in noise, constantly tweaking, constantly second guessing. Their emotions control every decision. They are not trading a system, they are gambling on hope. Now imagine this: you open your chart and it's quiet, clean. You are not chasing anything, you are reading. You can literally see where the big players are buying and selling. You watch how price expands out of consolidation and forms new balance zones, forms new consolidations. Suddenly, it's not random anymore, it's logical. That's what trading becomes when you combine market structure and order flow. Think about this. What if you could actually see those big orders appear in real time? What if you knew exactly where the institutions are defending their positions? Would you still be guessing? Or would you finally start trusting what's in front of you? That's the question that changes everything. Let's be honest, most traders never get there. They stare at random candlesticks, trying to decode patterns that don't matter. They chase something mystical: the algorithm, the secret code, the liquidity map. It all sounds smart, but it's an illusion. Because the market isn't magic, it's just people buying and selling. It's an auction. And most traders lose because they ignore that simple truth. When you finally combine structure and order flow, you start to see the market story. You understand why price moves. You stop predicting and start reading, interpreting the price for what it is. You recognize balance, expansion, absorption, follow through. You stop asking what's going to happen next, and instead, you start asking what's happening right now. That's when trading starts to make sense. When I started trading back in 2020, I was just like everybody else. Moving averages, RSIs, simple mechanical strategies, trading patterns, triangles, boxes. But then I found order flow. It fascinated me, but it was overwhelming. Too many numbers, too much noise. So I went looking for something easier, and I fell into the ICT rabbit hole. I watched hours upon hours of videos about algorithm and liquidity, believing I had finally found the secret. But over time, I realized it was all a fairy tale. It was all a theory. There was no proof. They say there are no buyers or sellers that influencing the market, that there is no buying or selling pressure. It's all an algorithm. The delivering price, the algorithm is responsible for everything in the market. But when you watch the actual tape, when you watch actual orders hit the market, you see the buyers and sellers. You see the battle. That's when it clicked for me. The market isn't random, it's an auction. And real money, big orders, big players, the actual smart money move the price. So I went back to basics. I rebuilt from the ground up: pure market structure, support, resistance, supply and demand. Then I created SBS sequence, a simple pattern for trading breakouts from consolidation to expansion. And now I've come full circle back to the order flow, but this time simplified. Just the essentials, because that's all you need. So here's a simple framework for trading market structure with order flow. So first of all, we want to identify balance, because market moves from balance into imbalance, seeking the new balance. So I always say market moves from consolidation to expansion and back to the consolidation. And all the money is made during the expansion, and most of the money is lost during the consolidation, because mostly traders are trying to catch that nice expansion, that big move that's going to give them 3R, 5R, 10R, instead of trying to scalp within consolidation, which is still doable, but most of the money you're going to make is during the expansion phase, during the trending phase of the market, where the market's seeking new balance. So the number one step is to look at your chart and just use simple support and resistance, simple market structure to identify where is that consolidation. And the more time you look at the chart from this perspective, you will train yourself to spot consolidations, because you know that after that consolidation breaks, that's where the money can be made. So when you see consolidation pre-market, you should be getting excited for the market open and trying to see, are they going to break this consolidation and push the price into one direction? That's your opportunity. So after you identify that consolidation, step number two, you wait for the breakout. That's the start of the expansion. And more importantly, you want to wait for the break and retest. And that's a simple range break and retest setup that you can execute with this framework. Step number three, this is where the order flow comes in. This is where we want to see if they're actual buyers or sellers at the breakout. Are they going to support the breakout, or is this just a fake out? That's what we call follow through. If there is no follow through at the highs or lows, upon the breaking the consolidation, the price will revert back inside of the range, back inside of that consolidation. But if there is a follow through and there are big players that are participating in a breakout, that's your green light. That's where you can join them and ride that expansion higher. This is how you scalp the momentum. You're riding that momentum, let's say higher. Let's say you buying the breakout. So that's like a short squeeze. While the seller's getting stopped out, it's giving you momentum and you making more and more money if you're catching that breakout. It is a zero sum game. It's a buyers versus sellers. And you need to identify who is going to be wrong, because one side needs to be in pain in order for the other side to make money. So once you have that breakout, step number four, you can put a volume profile on that breakout and look for the real inefficiencies, not just any random fair value gaps. If there are five fair value gaps on the chart, which one is correct? Which one is the really the one that's going to provide you with that entry opportunity? And volume profile will show you which one. You look at the area where there is very little volume traded. It's called low volume node. And you wait for the price to retrace to that area, and that's your entry. And step number five, you trade the expansion. So after your entry, you simply trail your stop loss as the price goes higher, higher, and higher. And you trail the stop loss behind the big orders. So when you see on the breakout buyers coming in on every higher high, you setting your stop loss below those buyers every time, also below the market structure. As price making higher high, you want to place your stop loss at the protected lows, and you keep trailing until you take profit or market stops you out. As simple as that. So now let's go to the examples, and I'm going to show you how to implement this framework on your chart. So I use the platform called Motive Wave. You can download it for free. You can even get a futures data for free. But these examples I'm going to show you on the NASDAQ chart. And actually, I took these trades. And I have live recordings of these trades with narration explaining everything, reading the candles in real time. That's available for my private community. You can join us at stoicage.com. But here's the 1 minute chart on NASDAQ. And these bubbles represent buyers and sellers. So this bubble 48, that's 48 contracts of NASDAQ futures were executed. So the NASDAQ futures, the NQ futures, this means that 48 contracts were executed here. It's a buy order. 58 contracts were sold here. It's a sell order. Now, these bubbles don't mean that the price is going to go up or down. But if there are big players playing the market, like over here, this is selling pressure. Sellers coming in and pushing the market lower. These also could be long liquidations, and combining them together creates an expansion. Market went from the balance to imbalance, from consolidation to expansion. So let's walk through this chart. This green line is the 20 simple moving average. I made a video on my YouTube channel. Go check it out. How to use 20 and 200 simple moving average for you to get immediate bias in the market and what's going on. But we want to spot consolidations. And this was a new all-time high on NASDAQ. There is a break of structure. There is an obvious swing point, right? So most people would be buying this area over here. This is the move origin, right? We have a gap here at the top. So this move origin is unmitigated somewhat. So the structure is still bullish. So if we are expecting a higher high, we should see buyers coming in at this move origin, right? On this pullback that looks like a retracement at the time. So what do we see here? We see price start consolidating. We got this bearish structure on top. We have the seller. We have the move down, and price retraces to these sellers, and there is also inefficiency on that leg down. Price retraces and moves back down, back below the 20 simple moving average. So this is telling us over here that sellers are in control. And then we see more sellers trying to jump in and push this price down. So if you just look at this portion, there are more sellers than buyers. There are more big, aggressive sellers coming in, and only a few buyers over here that trying to buy this. So price breaks lower, have a retest, and continues lower, starting the expansion. So there is that break and retest of the structure and continuation lower. Also, this is an SBS Model 1 that I teach. Also, I have a video on my YouTube channel. Go check it out. That's that swing breakout sequence that I created, which is we have number 1, breakout, first pullback. That's number 2. Number 3 is a lower low. And number 4, we're going to take out the first stop and continue lower. That's an SBS Model 1. And in this case, support became resistance. And you can see that these buyers are now trapped. So on this drop, they are getting liquidated. You see the big red orders coming in. So there's more sellers coming in, and also the buyers are getting liquidated, creating the expansion move down. So usually this moves in 2 phases. You have the measured move, which is we have one leg, and the second leg. That a lot of times the second leg would equal to the first leg. That's the measured move. Let's go to another example. This over here happened during pre-market. There is 7 a.m. New York session. This is Eastern time. This is a pre-market, and we are heading into the market open here. So we have the consolidation pre-market. Price breaks out, has a pullback with the SBS Model 1. the same thing. We have a breakout, market makes a high. We have a first pullback, market breaks another high, and we have a retracement deeper, taking out those first pullback, SBS model 1, because we're retesting the high, and price bounces and continues higher. So there are no sellers that trying to push this back down. This is not a fake out. The fake out would be break above and back into the range. This is break above and test, break and retest, and continuation higher. And when you see the big green orders coming in, it means that the buyers are buying the breakout, pushing this price higher and higher. And this is also could be sellers getting liquidated, but also these could be a buyers buying the breakout. The important part is that you want to see green on the buys and red on the sells. So this gives us confidence that we are in the right move, that we are aligning with the market direction. As you can see, there are no red bubbles. There are some over here, but then they are proven wrong. So you want to stay on the right side of the market. So let's move on to another slide here. This is that pre-market trade that I just explained to you. So let me go back. As you can see over here, SBS Model 1, and there's big orders over here. This is pre-market, and this is now after the market opened. And here was the main level of support. I call them big boys. These are the big orders that were executing, pushing the market to the new all-time high. And price starts to consolidate after the market open. You see 930 open here. We are opening up where the big boys are. And the logic telling us, okay, these big boys need to push the market higher. You can try to enter in this side of consolidation, but the framework says stay out of consolidation and wait for the break and retest. So market chops around, traders lose money, of course, because after the market open, if market stays inside consolidation, it will stop them out. It will go up, go down. As you can see, there are sellers over here creating this move down. Price retraces to those sellers, and we can't break out. Obviously, there is a resistance here created by those sellers, and we have a support created by these buyers. So price consolidates, and eventually price breaks down. This red line is the 200 simple moving average. We break down below the 200 simple moving average, and we have a flip in moving averages. So we were bullish, but on this break, we started to get bearish. So this is a break and retest. And this is where you can enter. If you miss, you might have another chance, but after this level is broken, support becomes resistance, and we start the expansion move down. There it is again. We have leg 1 and we have leg 2. And you see consolidation, expansion, back to the consolidation. After the break happens, we have some people buying the dips. They are looking to the left here. Oh, there is a support. There is this and that. There is support. But if you don't have these bubbles on your chart, if you don't see these big orders, look, this is in the middle of this leg. How do you know that this is an area of support? You can only understand that this is an area of support if you have this green bubble. If you don't have this bubble, there is no way for you to tell that this is a significant area. It's just straight up. There is no structure in here. There is a straight up move. So unless you have these orders, these big boys, these over here, you will never know that this is a support area. You will be looking for this over here. You'd be looking for this support over here, right? Because was a break of structure, right? And maybe you're looking for the sweep of this low, And there were buyers in here, as you can see, right? People were buying the dip. They are trapped buyers that are looking to the left, but it's too late. We already broken the support, break and retest, and look at these sellers piling on. Look at these sellers jumping onto this. And there's more sellers. This is also could be the liquidations of the buyers. That's why I called it thanks for playing. You have the knife catchers trying to jump in front of the train, getting destroyed. But once you combine the market structure and order flow, you will see clear that these buyers were holding price, and once they gave up, it started to expand. So I caught this trade. Like I said, I'm posting them for my private community. You can join us at stoicedge.com. You also get access to the community forum, journal, and access to me directly if you want to ask me questions in more details. But here's how you could have caught that break and retest. So this is how to use the volume profile. This is was that break of structure. As you can see over here, they were still buying this up, these big boys, right? Over here also, there is no closure below this low. So this is like a sweep. We're still not sure. But then finally over here, we got the break of structure. We got the candle closure. So we can consider this as a break of structure. Now, the first entry is a break and retest. So this leg that's responsible for the break, you want to look inside of this leg for inefficiencies and you want to short it on the retest. Now, if you are not sure, let's say you missed this. Let's say you were not sure that this is actual break. Not a big deal. We have another leg. But eventually you gotta keep in mind that this is gonna start expanding. The best entry would be here on the range break of retest. This is less likely that it's gonna pull back, but you can still find an entry. So in order to find an entry, you want to measure the expansion move down. So you got this leg down, and inside of this leg, you want to look for the inefficiencies. So there is a low volume area. So over here on this volume profile, this is where was least volume traded on this leg down. So price will a lot of times and most of the times will revisit these areas, creating you an opportunity to enter. So as you can see over here, we got bunch of sell orders entering. And this is also lining up on the break and retest of this support that now acts as resistance and price continues lower. Now you see these buyers jumping in. It doesn't mean that they're going to be able to push this price higher. It just means that they're trying to buy the dip, but the dip keeps dipping. And the more they're proven wrong, the more they're going to add fuel on the way down. So this is how you could have caught that trade after realizing that the buyers were proven wrong, that these big boys gave up. We got break, retest, break, another retest, goes down. This is how you could have caught the expansion. Now, after that move, we have another one. So there are those big boys that gave up. There was a break, a retest, expansion down. We created another consolidation. The market closed over here. This was Tuesday, I believe. We have consolidation pre-market, consolidation, and here was 9:30 open. And look at those buy orders. They are supporting the breakout and they pushing the price higher and higher. These sellers pre-market were proven wrong. They have to close their positions, and we have buyers supporting this breakout and moving the price higher. So I caught this too. I caught the same trade here. I traded this for like 3R. It was beautiful. But here's the zoomed in picture. So there's the pre-market. Notice how the 20 and 200 SMA flipped pre-market. Notice there's big buyers pre-market. 9:30 open. We move up. Buyers move up again, pull back to the 20 SMA. These buyers are supporting price, and we off to the races. Sellers trying to jump in, sellers proven wrong, short squeeze. We got more buyers, and here you can start taking profit. You can trail it behind the 20 SMA. This is the expansion phase that I also taught inside of the Stoic Trader Protocol. So, one of the courses. But here's that break and retest. Yet again, break and retest. The resistance was a bit higher here. So, was break and retest. And here's that volume profile yet again. If we measure this move up, right? This is an SBS. We have high, price pulls back, higher high, liquidates the first pullback, and continues higher. This is the SBS sequence. And look at that low volume area over here. This is where the price found support. And this is where it was the retest of the moving averages. We flipped the moving averages. We were bearish and we flipped to bullish. And price extends higher. Let's have another example from this Friday, where the Trump announced the tariffs on China. A big surprise event. The market dumps like 1,000 points on Nasdaq. But yet again, this was the same setup, almost the same setup as on Tuesday. So remember these big boys? This was on Tuesday. These big boys were holding the price and then price collapsed. So on Friday, we kind of have the same thing, but without a break and retest. It was a surprise news, but here's the big size. We have the big boys supporting this level. Price is bouncing. Every time it goes into the zone, it bounces, 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 bounces. And the sellers holding price down and the buyers holding price inside of this consolidation. We break below. Was after the Trump announced the tariff. So there was no break and retest. It just collapsed. So over here, this would be break, wait for the retest, and continue lower. There was no break and retest, but I actually still traded this day. I traded this move down. I traded this move down, and I walked out with like 6R for the day, because when volatility happens, this is the best time to trade if you are not scared. So look, on the way down, we have liquidations, buyers getting stopped out, but also we got sellers, right? So price pulls down to the protected low. This is the high time frame low to the left. And what I was watching over here is, can we break down lower? So we got little consolidation and another expansion move down, and I entered it over here. This was a little pullback into this inefficiency, and I wrote this down, which is not a bad trade. But look how these sellers were able to establish this as a resistance. Try to bounce back down, try to bounce back down, breaking the low. Now we are breaking the higher time frame low. So the sellers starting to pile in here. We even have big buyers coming in. Maybe this is the sellers that caught the sell off and taking profits. But also, if these buyers are proven wrong, they're going to be in pain. They're going to be trapped. So price moves lower. And now these buyers are forced to close their positions because they are now in pain. So this over here, if you measure this move down, you will find the low volume node over here. If you measure this move down, you will find a low volume node over here. So let me show you. There is that move down, breaking that protected low. And we have this area that has very low volume, and price retraces exactly to here. Creates a double top and starts going down. So this is high, higher high, and we have a break of structure. So over here, break of structure. On that leg down, you have inefficiency, and that's the same inefficiency as over here. And you can see yet again, price can't go higher than that low volume node in efficiency. These are the real fair value gaps that you need to be monitored. Now, which fair value gap is a legit one? Which one? This one, this one, this one, which one? By putting the volume profile, you're going to know which one instead of just guessing and trying to trade off of random imbalances, random FVGs. Yet again, over here, these buyers were holding this price, right? We also have inefficiency over here. So you can make the case that maybe we're going to bounce. But instead of just blindly going in on these bounces, oh, they're big buyers buying this price, so it must go up. No, we need to see confirmation. Because if these buyers proven wrong, it's going to be break, retest, and continuation down. So here's that continuation down. We had those buyers, we broke and retested and continue lower. And I actually caught this move down. And yet again, we had the big buyers here trying to support this price, trying to buy the dip or whatever. But as soon as they proven wrong, we even had this big buyer coming in, right? Proven wrong, break, retest. We had consolidation, break, retest, continuation. Even over here, you put the volume profile on this leg down, you find the inefficiency, low volume node, you wait for the price to come back to the low volume node, you wait for the sellers, you see those red circles over here. The circles are smaller because they are relative to these big circles too. So the bigger the size, the bigger the circle. But these are also, there is like 40 contract short, 50 contract short. It shows you intent. You can build a whole narrative, an actual real narrative about who's in control and where the prices are likely to go next. Same over here, break of structure, you measure this leg down, you find the inefficiency, low volume node, and thanks for playing, as I say. So these big orders give you extra confirmation to support your trade. It gives you more confidence when you actually read the market, when you actually read the tape. And it's a different mindset. It's a proper mindset. Because if you think that everything's ran by algorithm, you are blind. You are lost. If you're just looking at the candlesticks, you don't know where those big buyers are. You don't know why the prices keep bouncing there 50 times. You don't know. Here's the last example. This is Bitcoin 15-minute chart. And we had this big sell off here that also was triggered based on the Trump tweet. This is the Friday here, this sell off. And a lot of people were dumbfounded. A lot of people got liquidated. A lot of people were destroyed. It was like $10 billion of crypto were wiped out overnight, which is in itself, you shouldn't be leverage trading crypto hoping for a big win. That's gambling. That's not what I teach. And I don't want to be that guy. I don't want to be the smartass. But if you had these bubbles on your chart, you could have seen it coming. Because on October 4th, a week ago, there were big orders over here piled on, big orders. This is the new all-time high for Bitcoin. And why are these orders here? Then price goes up, makes another high. So this is all-time high on a Bitcoin. And look at these sellers. Price goes down, blah, blah, blah. Boom. Creates a break of structure. Over here, right? This is the low, the high, lower low. Break of structure. Price pulls back. Look at the sellers here. Look at the sellers again. Right? You see those bubbles in there? Those are the sellers piling on. Another break of structure. Liquidation, somebody buying the dip, whatever. Sellers taking profit. You can measure this leg, find an efficiency in here, and look at these sellers on that inefficiency. But on October 4, you could have started thinking, why there's so many sellers? Those are big sellers. Those are big sellers that are piling on at the all-time highs. They must know something. And when the price starts coming back to that area, they will be doing what? They will be defending these positions and they will be loading more shorts. And even over here, the moving averages are flipped. We are back below the 200 simple moving average on the 15-minute chart. And you can see how on these pullbacks we can't get about. And we go from consolidation to expansion. And then you see all of these big, big liquidations. And this is not hindsight. You can see these orders printing in real time, not after the candle closes. As soon as somebody executes big order, big lot order, you will see the bubble pop up on your chart. I'm using the multi-wave software. It's a nice software, works on Mac, works on PC. You can download it for free. And I'm using Big Trades Indicator. It's very simple. You don't have to dive deep into the order flow. All we really need is these bubbles. We just need some kind of representation of knowing where those big orders are. And you can use whatever tool you want, but the main point of these bubbles is to show where those big players are. Where are they transacting? What levels are they defending? What levels are they breaking? Where are they pushing price? This is how you build a real narrative about what market is doing. And more importantly, what are the big players are doing? Because we can draw patterns all we want. But as retail traders, we are a small fish in a big pond swimming with sharks. And we need to know who are the sharks are going to eat next so we can feast with them and not be the prey. If this clicked for you, if you are done guessing and you want to see this live, subscribe here to this YouTube channel, follow me on Twitter at StoicTA, and join my accountability group of Stoic traders at stoicedge.com. Inside Stoic Traders, you'll see my live executions, weekly trade reviews, and a community of disciplined traders mastering structure and order flow together. When you start trading this way, you stop reacting. You stop chasing setups. You begin to read, not guess. You understand what the market is trying to do. You can feel the rhythm, and that gives you peace. No more FOMO, no more confusion, just clarity. Don't trade what you think, trade what you see. And here's why this works. Market structure gives you direction, the map, and order flow gives you confirmation, the actual smart money footprints. When you align the two, you are trading with logic and evidence, not emotion, not hope. That's the true, real edge. The market isn't random, it's an auction, and every auction follows the same rhythm: balance, break, expansion, new balance. Market constantly moves from balance to imbalance, seeking new balance, from consolidation to expansion and back to consolidation. Once you learn to see it, you'll never unsee it. You'll never go back to guessing. You'll trade with clarity, structure, and flow. Welcome to the new evolution of Stoic traders. And before I leave, remember, no matter what happens in life, the only way is up.